Hey, happy Friday, everyone. It's Kim Hong here. Today, I'll be sharing with you a trade idea with a potential profit of 150 pips. Without further ado, let's jump in. Okay, so this trade idea is actually one on the Australian dollar, okay, Aussie dollar pair. Evergrande escaped yet another default. Okay, I'll go into that shortly. All right, so let's just look at the fundamental, what do you call it, fundamental bias behind this trade idea. All right, so I think it was during midweek, or was it yesterday, that the Australian Bureau of Statistics, okay, the ABS, actually released the jobs report, okay, for the month of October, all right, and it's kind of a surprise, okay, because the consensus was that jobs were being created, about 50,000 jobs were being created for the month of October, all right. However, the ABS, okay, actually reported a loss of 46,300 jobs, okay. Instead of a jobs gain, we actually get jobs lost, okay. On top of that, unemployment rate rose from the previous 4.6% to 5.2%, okay. So the rise was actually greater than the expected 4.8%, all right. So overall, very negative report, all right, a very negative jobs report coming from Australia, all right, and it was actually reported that the reason behind this weak report was actually due to the period of time when the job survey was actually carried out, all right. So I don't really have the exact date, okay, but the period of time that the survey was actually carried out, okay, New South Wales was actually, I think, free of COVID restrictions, okay, at that time. Restrictions were lifted in New South Wales. But for the state of Victoria, okay, at that time when the survey was taken, Victoria State was still in lockdown, okay. So there is a bit of a, I would say discrepancy, okay, but it's eventually Victoria opened up, okay, all right. So we unfortunately, okay, we did not get to this jobs report did not get to factor in the opening up of Victoria State, all right. So with the restrictions being lifted in New South Wales, more people returned to their job, right, and that actually led to an increase in jobs. But then Victoria State being bigger than just New South Wales alone, all right, was still in lockdown, right? So the number of jobs being lost during that period of time actually exceeded the gain from New South Wales, all right, which is why we are seeing a decline, a loss in jobs for the month of October, all right. Nonetheless, okay, we can actually expect the next jobs report to not be that poor, all right, because with the opening up of Victoria State, people start going back to work, then okay, of course, hopefully we don't see another round of lockdown, all right, or maybe further restrictions, COVID restrictions. Then if you don't see any of these things happening, then yeah, the jobs report for the next time round, which is November, okay, will likely be better than what we are looking at right now for the month of October, okay. Now, despite this whole explanation and things like that, all right, well, the market did not reacted kindly to the disappointing data, right, which led to the weakening of the Australian dollar across the board. Okay, so that was on Thursday. I think it was yesterday. Okay, but then during midweek on Wednesday, all right, the U.S. Bureau of Labor Statistics actually released a 3-decade high annual inflation coming in for the month of October. Okay, so apparently prices went even higher than expected. Okay, and with that, the market was actually expecting that the Federal Reserve may actually project an earlier timeline for interest rate hike. Okay, of course that we will have to wait till the December's FOMC meeting. Okay, before we know if there's any revision of their economic projections, and of course their timeline for interest rate hike, okay, because that is when the quarterly projection materials will be released. Okay, so with that, this whole strong US CPI report it's actually a very, very optimistic sign being sent out by the BRS, okay, the Bureau of Labor Statistics, okay, and as a result, the USD strengthened across the board, okay. So before the Australian jobs report was released, we already see one round of weakening of Aussie dollar, okay, and then when the poor Australian jobs report was being released the next day, we see further downside of the Australian dollar. All right. Now, that's the second point. The third point here is Evergrande. Okay. As the title mentioned, okay, Evergrande escaped yet another default. All right. So it was reported yesterday, okay, that they had just made another, what do you call that, payment of interest to bondholders, okay? And yesterday was actually the last day for the grace period, for the 30-day grace period being given to them, all right? So some would call this, I would call this a brinkmanship, all right? They, when the bond interests are due, they keep dragging on and they fully utilize, I would say in this case, okay, fully utilize the grace period, the 30-day grace period, and only at the last minute, the last day, probably the last hour or so, then they actually carry out their payment to the bondholders, okay? So it's a bit of a brinkmanship over here that we are seeing, okay? So in a way, I would say that is actually positive for the Australian dollar for the time being, okay? So let's just head over to the chart and I will show you the price movements, okay? So at the moment, we are looking at the H4 time frame, okay? H4 time frame, meaning this line over here will be the start of the week. And then during midweek, you see that the Australian dollar actually fell, right? Due to the strong US CPI data being released, okay? Causing the US dollar to strengthen across the board. And then we see yesterday there's further declining of the Australian dollar, okay, Aussie dollar, because of the poor Australian jobs report being released. And then, this actually sends the Australian dollar down to the 0.73 handle as indicated by this like blue line over here, okay? Then comes the positive news sent out by Evergrande, okay? They repay their bonds. So that kind of like stagnated the downtrend, okay? The recent strong weakening of the Australian dollar, all right? So at this point in time, okay, it's actually trading. You can see that it actually come close to my sell stop entry of 0.727, all right? Before actually heading up, like early on today at around, let me just look at the time. I think it's around 10 or 11 GMT plus 8, okay? Around that period of time, we see this this bullish H4 candle over here, okay? It's just a mere like 20 pips or so, yes, but it's actually likely due to the optimism coming in from the Evergrande saga, okay, which led to stagnation of the weakening of the Australian dollar, okay? So at the moment, I'm still expecting, okay, Australian dollar to actually weaken further, all right, to my entry level of 0.727, okay? So once it hit that level, my sell stop entry will trigger and, my potential profit would be around here, 150 pips, okay? Let me just switch to daily so you can see why I set it at this level, okay? So as you can see that my profit level of 150 pips is actually set at close to this low over here, all right? Because let me see, the last time it was trading that low was back in early November 2020, okay? So it's 1 year ago, okay? So as usual, if you guys are expecting, if you guys want to expect, well, I would say expect, but if you guys there's the chance of seeing Aussie dollar actually trading lower than this level over here, this level where I set my take profit, okay, there is a chance of doing that, all right, but there must be a strong reason for it, okay? For example, Evergrande will default a bond, okay, then we will very likely see Aussie dollar trading below that level, okay, or maybe more severe monetary policy, I would say dovishness coming from the Reserve Bank of Australia, okay, then we may actually be seeing further weakening, below this 0.712 level where I set my 150 pips take profit, okay. Otherwise, personally, I feel that it's safe to just put our take profit level in there and not expect Aussie dollar to go any further lower than this 0.712 level. Okay, so that is our take profit. As for our stop loss level, okay, it will be at this level over here, which is also 150 pips. Now, just a thing to note over here is that you guys can actually set the stop loss higher. I mean, personally, I wouldn't go any higher than 0.742, okay, because any higher would be, I would say, it's going to be a very, very long-term trade, right? This is a 300 pips. Okay, if you guys were to set a stop loss level be above this this recent high over here, that's, well, I wouldn't say recent high, but last month's high, okay, then we are looking at some 300 pips stop loss. Okay, 300 pips stop loss. That is when, you guys will probably want to look at a take profit of 250, 300 pips as well, which is way below this take profit level that I've set, okay? So yeah, I will personally prefer to set it at 150 instead of, anything beyond, all right? And like I said, at the moment, we are seeing quite a bit of downside on the Australian dollar, okay? And a strong upside on the US dollar, okay, because of the strong CPI and the weak employment data. And of course, the uncertainty caused by the Evergrande saga, all right? And I think it was yesterday, okay, that the this bank regulation, China's top banking regulator, okay, I think it was in the news that it actually said that they're actually investigating the relationship between Evergrande and a Chinese regional bank. Okay, not exactly sure about details behind it. Okay, but I think it's something that we all should pay attention to. Okay, if we are concerned about the Australian dollar or the Evergrande per se. Okay, so this China's top banking regulator investigating into the relationship between Evergrande and some Chinese regional bank that could actually potentially impact the developer, okay, Evergrande, negatively. So it's actually quite uncertain right now, right? I mean, on top of more upcoming interest to be due, okay, to be paid to bondholders of Evergrande, okay. Now we are seeing, Evergrande have a brush with the law, undergoing some investigation, and who knows what's going to happen next, right? But anything that is going to be negative towards Evergrande will likely have a negative impact on the Australian dollar, all right? Because, Evergrande is a property developer, right? So if, let's say, something were to go wrong, for example, Evergrande were to default and go bankrupt, okay, thus, reenacting something similar to the Lehman Brothers saga, okay, then we can pretty much expect a housing bubble to be burst in China, okay? And when, there's a housing bubble bursting in China, what do you need to build? Buildings, structures, right? You need steel, okay? And when you talk about steel, you will need iron ore to manufacture steel as well, right? And guess where does the Chinese actually import iron ore from? Australia, okay? So if the Chinese government were to say, okay, if the Chinese housing market, okay, were to go down, all right, were to burst, then that will strongly impact the import of iron ore from Australia, okay? And of course, if Australia were to export less iron ore to China, that will heavily impact the country's revenue, okay? Because, well, China is the top importer of iron ore from Australia, right? So if they are going to reduce any amount of iron ore impact, well, maybe a large amount, okay, then yeah, no doubt it's going to impact the country. Okay, and when it impacts the country, it will definitely have a negative impact on the Australian dollar. Okay, so yeah, we'll see how it goes. Okay, personally, right now I'm still I'm still expecting the Australian dollar to be weakened further. Okay, of course we need it to break below the 0.73 handle. Okay, before we can look for a selling opportunity. Okay, specifically, I have the 0.727 level sell stop entry being entered there. Okay, so in a case whereby this trade idea gets realized, the sell stop order gets hit, I will update you guys again on Traders Club. All right, so if okay, so that's all I have to share about the trade idea today. All right, I will see you guys on Monday during the currency call. All right, so take care for now. Have a good weekend. Bye bye.